Morning everyone, and welcome to our full year results presentation. I'm pleased to be here to report a strong set of results, my first as Chief Executive. As you'll hear, once again they show the strength of our sustainable growth model and the value of having exceptional talent and teams across our organisation. I'd like to start by thanking everyone at Halma for their hard work and dedication and their contributions to our significant progress over the last 12 months. I'd also like to welcome Steve Gunning, who joined as Halma's fourth ever CFO in January. Steve was most recently CFO at IAG, and I'm delighted that he's here with me today and is a part of my leadership team going forward. In a few moments, Steve will give you more insight into our financial performance. But first, I wanted to share a few reflections on what's driving Halma's success and the substantial opportunities that I see ahead of us. And if I start by going back to 2016, when I was first introduced to Halma, right? I remember then being really impressed by so many things. The purpose-driven nature of the group, the positive impact that we had on the world, the clarity and success of our sustainable growth model, the culture and the diversity of the talented people that I met. And I knew then that this was a special company and something that I wanted to be a part of moving forward. And it's this feeling that's grown stronger over the past 7 years and has really deepened over the past 6 months. As part of the CEO transition, I've had the opportunity to spend more time out in our individual companies. Every time I visit one of our companies, I'm always inspired by our fantastic people, the quality of our companies and the technologies, the scale of those problems that we're solving for our customers, and the lives and environments that we protect and enhance. As you'll see, innovation and creativity remain core to the group, and every individual plays their part in the group's success. I stand here immensely privileged to be leading an organisation with such a strong purpose and inclusive culture, and I'm excited about the opportunities ahead of us. And as I think about the future, it's often the case that a new CEO has been appointed to make fundamental shifts in strategy or significant changes in portfolio. In fact, when we last changed our CEO 18 years ago, that was exactly Andrew's brief. And then many significant changes happened in his first couple of years. Today, I believe we're in a very different position in terms of our portfolio, our capabilities, our people, the momentum we have in growth, investment and returns. In short, I believe we're in a position of strength with our sustainable growth model at its foundation. And it's a dynamic system, and its strength lies in the way each of the elements are interlinked and reinforce each other. At its heart, our unifying and ambitious purpose. This drives us to have a positive impact on people and the planet. Our purpose drives us to those niches within markets that are addressing long-term needs. And at Halma, we've always focused on those long-term growth drivers, and this underpins both our organic and inorganic growth. And all of this comes together to give us confidence in delivering our sustainable financial model. Our strong organic growth, returns and high levels of cash generation allow us to constantly reinvest in growth opportunities, both organically and through acquisition, and deliver those increasing dividends to our shareholders. Our ability to capture those opportunities over decades is underpinned by the agility of our business model. This puts talent close to those niche markets who can leverage our entrepreneurial and collaborative culture to innovate and solve high-value problems. I believe that this agility is especially critical now. Think about those challenges facing our customers, whether from climate change or ensuring our health and safety, or indeed facing up to economic and social volatility. Therefore, as we've done consistently since our foundation 50 years ago, we must continue to evolve and enhance our model to capture the significant opportunities for growth and positive impact. And it's in this context that there are 4 areas that I see as key priorities for Halma as I start my first year. First up, organic growth. It's critical that we have clarity on the customer problems that we're solving, the value that we're creating, and our ability to capture that value. Organic growth is the cornerstone of our financial model and is therefore our top priority. To do this, we'll keep our talent close to our customers and we'll maintain high levels of continuous investment in our products and services and continue to seek a strong return on those investments. Secondly, inorganic growth, the other half of our growth model. Again, in a fast-changing world with many emerging trends, it's important that we remain disciplined in our approach to acquisitions with a relentless focus on purpose alignment and only those market niches that offer those long-term growth, returns and cash flows. And it's this same lens through which we'll continue to review the existing portfolio and investments, and we'll need to act decisively when required. I don't believe that there's any fundamental outliers today. However, this must be a continuous process. My third area of focus is that of ensuring that we maintain the agility of our business model. This through our decentralised organisation model, our entrepreneurial and collaborative culture, and ensuring that we have the very best talent in our leadership teams across the group. Allocating our capital in the right markets provides that solid foundation. However, in a world where we're seeing the increasing opportunity, the increasing pace of change and volatility, it's that agility and our talent that's going to ensure delivery of our ambitious growth targets. Put simply, talented teams close to their customers, making great decisions, supported by being a part of a global group, will deliver sustainable growth and impact aligned to our purpose. I'll come back to this in the second part of my presentation. My final priority alongside growth is maintaining a disciplined approach to optimise the returns on the substantial investments that we make. Whilst I'm not signalling a change to our current KPIs, I do believe that it's critical that we maintain them as we continue to grow. And I know that this is an area that Steve will take the lead on. As I say, I'll cover strategy in a little bit more detail later. So before I hand over to Steve, let me just summarise our progress over the last 12 months. We've reported another set of record results with continued strong growth, high returns and substantial investment, aligned to both our sustainable growth model and the priorities that I've just described. We've delivered record revenue and our 20th consecutive year of record profit. And it's great to see our ambition reflected in the record levels of investment of over £500 million. This also reflecting the scale of the opportunities that we see in our markets. This investment is strengthening our capabilities both organically and through our acquisition. Organically, we've continued to build the strength and diversity in our teams to foster our entrepreneurial spirit by building on the power of the Halma network. And for our acquisitions, we've had a record year for both spend and acquired revenue and profit. As always, this investment is supported by our strong financial position and high levels of cash generation. Really pleasing to see our cash conversion back to targeted levels in the second half. And our growth has been delivered with continued high returns. While return on sales was below last year's unusually high level, it was well within our target range, as was ROTIC, which also remained substantially above our cost of capital. And all of this supporting a proposed 7% increase in the dividend, this representing our 44th year of annual dividend increases of 5% or more. Another strong signal of our confidence in the future. So this performance, together with a good start to the new financial year, means that we're well positioned for further progress in 2024 and beyond.